Hi everyone, my name is Anuj Jindal and today we are going to take the discussion forward on our series wherein I have been discussing questions on Ssc Aao paper which was asked in the year 2018 for the examination of SSC for the year 2017. So we are going to have a look at all the questions which were asked in Ssc Aao paper one by one, and I'm going to break them down for you, discuss the concepts behind them in brief, and after the completion of this series, I'm going to take forward the discussion and create courses on the entire accounts and economics, which is going to help you directly in your AAO examination. A little bit about myself. I have done BCom honors from Hindu College, MCom from Delhi School of Economics. I have also worked in McKinsey and recently I worked in SBI as a manager. I also have a JRF in Commerce which I received after my MCom from Delhi School of Economics. So let us start our discussion and take the first question, which is what are the objectives of preparing the trial balance? If you look at the book D.K. Goel, T.S. Grewal, NCRT, any book, there are four major objectives provided under the head of trial balance. What are these four objectives? The three objectives that are written here, that is, number one, to ascertain the arithmetical accuracy of ledger accounts, to help in locating errors, to help in the preparation of financial statement. All three objectives are the objectives of trial balance. So the answer is four, all of these. There is another objective, that is the fourth objective, that says to obtain summary of ledger accounts. Summary of ledger accounts. So that is also an objective of trial balance. When we talk about trial balance, then we will be discussing all these objectives in detail and understand what are the meanings of these objectives, because they are lengthy concepts and without understanding the basics of ledger accounts, journal accounts, subsidiary books, and then trial balance, it's very difficult to understand the meaning of all these objectives. So the answer for this one is for all of these. The second question is which among the following will be shown as the debit balance in a trial balance? Which among the following will be shown as a debit balance in the trial balance? The answer is 1, because on the debit side of trial balance you show all the expenses or all the areas where money has gone out, and on the credit side you show all the incomes. So all the incomes come on the credit side. If you can see here, long-term loan is a receipt of money, advances from customers is a receipt of money, and purchase return is a receipt of money. So all these are incomes or receipts. To be very precise, these are receipts that have been received by the enterprise, by the partnership firm or the proprietorship or the enterprise. So therefore all these are going to come on the credit side, whereas all the payments are going to come on the debit side, and interest paid is a payment, and therefore this is the only head which is going to come on the debit side. Therefore you have answer as number 1. The next question is if a credit purchase of machinery is recorded in purchase book instead of journal proper, it is an error of what? You need to understand all these errors in order to be able to answer it correctly. Compensating error is an error which is compensated by another error of the same kind. For example, you made an error of 5,000 rupees wherein it was supposed to be debited, but instead you credited it. But on the other hand, there was another entry which was also for 5,000 rupees. It was supposed to be credited, but you debited it. So you debited what was supposed to be credited, and you credited what was supposed to be debited. Therefore, you have compensated one error for another one. This is not that. If a credit purchase of machinery is recorded in purchase book, that means that you purchased machinery, therefore it should have been recorded in machinery account. But instead of recording in machinery account, you recorded it in purchase account. I hope you understand by now. In the first two sessions that we've had, we talked about the difference between purchase account and purchase of land, purchase of machinery, purchase of any asset account. So it should have been purchase of machinery account, but it was actually recorded in purchase account. So there is no compensation here. Therefore, this is not our answer. Second is error of principle. We'll be talking about this also. Third is error of omission. Omission is when you omit it. That would mean that you were supposed to record it in machinery account, but you did not record it at all. That is an omission. It comes directly from the word omit, which says or which means to leave something. The last one is error of commission. Error of commission arises when you record a wrong amount or you carry out another an error. That is, for example, in place of subtracting something, you add something. So, in place of, let's say, subtracting 4,000 rupees, you add 4,000 rupees. So, that would be an error of commission. It also shows in trial balance, but when we talk about this particular error will not show in the trial balance, because the reason is that instead of, let's say, the machinery of was for rupees 1 lakh. So instead of recording it in the machinery account, you recorded it in the purchase account, but the trial balance is going to tally. If you look at the trial balance, the way trial balance tells us the errors is through an error in the summation of numbers. So in this question there will be no error there, because the trial balance has recorded 1 lakh rupees as it is. The only problem is that it has recorded it in a different account, a wrong account. But in commission errors, you are supposed to see that in the trial balance. Therefore, this is not a commission error, and this is an error of principle. An error of principle arises when you're not following the principles of accounting as given by generally accepted accounting principles, that is GAAP, generally accepted accounting principles. So this is an error of principle, because you were supposed to record it in machinery account. The accounting principle says that you have to record all the purchase of assets in this respective accounts, but you recorded it in purchase account, which is supposed to record only the purchase of goods that are to be used for creation of things, creation of goods or services that are to be sold by the enterprise. So if you're selling cycles, let's say, then whatever purchases you are making for creation of cycles, for manufacturing of cycles, only those are to be recorded in the purchase account. Purchase of machinery is not to be recorded there because it's an asset. Therefore, this is a error of principle. The next question is, which of the following error will be rectified through suspense account? What is a suspense account? A suspense account is created when you don't know the account to be used. For example, you receive some money from an enterprise, from another person, or let's say from another enterprise, but you don't know how that money is to be used. Or let's take a better example. You know that you have received, let's say, 10,000 rupees, you have an excess 10,000 rupees, but you don't know from where that money has come to you, and therefore that is to be entered in suspense account, because you still don't know from where that money has come to you. Which of the following error will be rectified through suspense account? That is the question. Let's have a look at all these options. Record of sales return by Lalit of rupees 5,000 in purchase return. You have a purchase return, you know whatever sales you had made. You had a record of sale return in purchase return. So you had a sale return, but instead by error you have recorded it in purchase return account. So this is an error of principle, and no suspense account is required in this, because you know the mistake that you have made. You know in which account should it be have been entered. Omission of recording sales return by Lalit of rupees 5,000. Lalit was required to record sales return of 5,000. He did not do it. He omitted it, and now he is going to record it. So no requirement of any suspense account. Sales return of rupees 5,000 by Lalit recorded as rupees 500. This is an error of commission. You know when you have recorded it wrong. So what he's going to do? He's going to record or make another transaction of 4,500. That is the difference between 5,000 and 500. No need of a suspense account here also. The fourth is underrating of sales book by rupees 5,000. This is an error which requires a suspense account. Why? Let me tell you why. You have sales book wherein all the sales made by the enterprise or made by you personally are recorded. There is an underration of sales book. That means if the sales were required to be, let's say, 50,000 in a year, you recorded sales of only rupees 45,000. You have not recorded a sales of 5,000. So now you're going to record it, but you don't know to whom these sales have been made. Either these sales have been made on cash or these sales have been made on credit. You have no idea about it, and therefore when you have no idea about this thing, then you're going to use suspense account, because you cannot charge or you cannot enter it into cash because you don't know whether you have received cash or not. You cannot enter it into anybody's account because you don't know who has purchased this amount of goods from you. Therefore, you're going to use suspense account. So our answer is 4, suspense account here. The last question in this particular video is, which of the following statement is false in relation to the term depreciation? A very interesting and a very exciting question. The statements are, or the options are, it is a decline in the book value of fixed assets. Yes, it is a decline in the book value of fixed assets. It is a continuing process. Yes, it happens every year. Once you purchase a machinery, purchase an asset, therefore it's a continuous process. It is a non-cash expense. Yes, you're not paying any expenses for the depreciation that is happening to you in your accounting books. Therefore, this is also a meaning of depreciation. What is an unexpired cost? If you don't know the meaning of unexpired cost, then you're going to get confused in this question. Unexpired cost is a cost which has not yet been charged to expense because it represents some residual value. So this is the cost which has not been charged to expense account, which because it represents some residual value. The meaning of this is, for example, you purchased a car. You purchased a car and you purchased it for, let's say, 10 lakh rupees. Now it's been 2 years since you purchased the car. You were applying depreciation of 2 lakh every year. So 4 lakh depreciation has already been applied. Now you're left with a value of 6 lakh on the car. This remaining value of 6 lakh on the car is going to be your unexpired cost, because this is the cost, this is the residual value that is still remaining in the books of accounts. So this is not an explanation of the term depreciation, but this is an explanation of what is left after depreciation, and that is exactly the meaning of unexpired cost. So our answer is 3, unexpired cost, because this is not true in relation to the term depreciation. So this is all for today's session on Ssc Aao question analysis that we have been doing. Tomorrow I'll come forward with some more lectures, and I hope you like this lecture. If you like this lecture, please like my channel and subscribe to my channel, so that I'm encouraged to come out with more such videos, and so that I'm encouraged and motivated to create the complete free course, which I'm going to create very soon if I get the required response in the area of Ssc Aao accounting and economics.